All right. Welcome, everyone, to TradeView Live, episode, I blanked there, 11 or 12. Yet another installment of our biweekly series looking at supply chain data, topics like tariffs and shipping trends. I'm your host, Ben Tracy. I lead strategic business development for Vizion, joined here by my co-host, co-founder and CEO, Kyle Henderson. All right, Kyle, we might have some new folks in the audience today. So let's do our disclosures and sort of FAQs at the beginning, and then we'll go into some of the analysis of what's happened in the last 2 weeks in the world of container shipping. Let's start with, what is TradeView? What are we here to talk about?
Thanks, Ben. TradeView is the industry-leading trade intelligence platform. We monitor the trade behaviors of 1.5 million companies and provide 90-day trade forecasts for all of them. In regards to containerized freight, we see 57% of all global freight movements, 3 times more than any other platform out there. And we use this information to also map supplier and product networks across the world, and then layer on AI researcher tools on top of it. You got some screenshots in a little left here. It's a SaaS application you get access to. It's also a data set you can access. And this has been offered for about a year from Vizion.
And when we talk about this 57% global coverage and the trends that we'll go into in a minute, how are we getting this information? Where does the data come from?
Yeah, fair question. So we spent the past 5+ years connecting to more than 270 different data sources. So major ocean carriers, rail carriers, satellite networks, terminals, ports, etc., to be able to get the best tracking information for freight out there. Additionally, we have connected to major booking platforms, and that allows us to get access to planned freight movements before it ever departs its origin. And we take that information, which looks a lot like bill of lading information, and we build the TradeView product from that.
Yeah, and it speaks to something we're trying to do different with this analysis, is to be able to be forward-looking. A lot of what we see out there is historical. There's a lag. So what's unique about our mix of ingredients and the data that we source? How does it let us really forecast what will happen in the world of global shipping?
Yeah, so the vast majority of the shipment data in TradeView, it starts off as a booking. So we see the goods, the parties, and the shipment plan before often goods are ever loaded into a container. And then we actively track it all the way to its destination. Other products in market that are, not quite up to the level of TradeView might provide you some of this information, but only after the delivery is completed and for a far more narrow geography as well. So how can we forecast the future? We see the bookings, we see volumes of bookings, 56% of all ocean freight becomes visible in the TradeView platform. And with that, we're able to take these operational plans, build our own predictive models, and forecast how different companies, products, and country to country trade will play out over the next 90 days.
Yeah, we actually have a slide in a few moments that goes into an update on our forecast we're issuing for U.S. container arrivals. But before we do that, what we've done over the past few months is given a high-level view of booking trends for global regions. So let's give an update to the audience on what's happened in the last 2 weeks.
Right.
Starting with global bookings, Kyle, how would you read this, especially considering the context of what's happened, the season that we're in now, entering the late summer, and factoring in what has really been growth in the last, 5 or 6 weeks? What did we see in the last 2 weeks for global bookings?
So for bookings, ocean freight bookings placed for any origin, any destination all over the world, we're seeing last week was down a little bit week over week, but slightly higher, 7% higher year over year. And this week, it's about the same amount of booking volumes as last week, only down 0.8%, and year over year trend down 0.4%. So right now, in this week of August, 18th, we're about the same point we were last year for the amount of bookings being made globally.
Yep. And US import bookings, I'm seeing mostly flat behavior, but what it looks like in the last 2 weeks is actually an increasing downward trend, a little over 5% down each week. And looks like now, at least in the most recent week, we're down quite a bit in comparison to the year before, over 17%.
That's right. And I think a big chunk of that will come from this next chart down below that we'll talk about. But this also does speak to any origin heading to the United States. So
yeah, we were
dropping
seeing
a little. Go ahead.
I was going to say we were seeing for China to US, which is that primary trading partner, at least when we think about ocean container shipping, where a lot of the tariff conversation attention has gone, despite the fact that there was an additional 90-day extension put in place 2 weeks ago, we have seen an additional drop. And at this point, we're well past the 10 to 18% year-over-year drop that we were in for the 4 or 5 weeks prior. For the most recent week, we're actually down over 30%.
And yeah, the China to US bookings is a major portion of the overall bookings to the US. I mean, you can just see it here from the actual TU volumes we're seeing in the platform, 122,000 compared to 335. So between 40 and 50% of all bookings heading to the US that we see come from China. So it has a pretty big impact on this US import number, but this is pretty substantial.
Yep.
19% the 2 weeks prior, 30% down year over year. It'll be interesting to see how we continue this, say, equalization process in the world in terms of the movement of origins, how freight is being, how suppliers are being sourced from many places outside of China. And there could even be a story here. We could go deeper into the future, but we did see lots of that volume from China shift over to Europe through this summer. So it'd be kind of interesting to look at this as well as China to the EU and see that. And it hasn't been able to consume all of that difference, or is it net reduction for China in some way, shape, or form?
And similarly to the question I think we got from an audience member at the end of our last TradeView Live 2 weeks ago, is as China to US has gone down, we've seen Vietnam, Cambodia, Thailand, and the other surrounding countries, shipments from those countries to the US actually go up. So let's look at
questions. Well, speaking of questions from audience members, there was a comment just dropped on this TradeView Live session here in LinkedIn, but feel free to drop your own comment. We'll see it live and we'll be able to address it. If we can answer right here today, we will. If we need to bring up the TradeView app to answer it, we will. But feel free. Don't be shy. Ask away.
Absolutely. So let's go into a deeper historical context, not just comparing on a weekly basis to the year before, but in fact, over the last 2 years. So with global bookings over the last 2 years, what we were looking at is that we were actually a little bit above 2024 levels for the last few weeks, as well as above 2023 levels. But in the most recent week, we've actually equaled 2024 levels. That's that yellow line that we see us really matching right now. But we are still above 2023 by about 200 to 400,000 TEUs per week. Yep.
US import.
Yeah, we were at this inflection point a couple weeks ago where we were starting to move down from 2024 levels. And the question is, would we actually drop below 2023 levels as well? We are equal to 2023 levels today, as of the most recent week. So the downward trend would point to what might be the case in 2 weeks is that we're going to see lows not only for the last year, but for the last 2 years, where you might see that blue line dip below the green line as well.
Yeah. I would not be surprised if we see that happen. So now the question will be is like, how long will that decreased volume last? And there's also this kind of question around, seasonality has been unpredictable this year because of all of the tariff whiplashing back and forth one way or the other. So there starts to be a question of, will seasonality return at some point? Perhaps maybe not until we start talking about, just after Chinese New Year and the coming year. I could see it not getting to somewhat normal again in terms of seasonality patterns until after the major holiday season in the fall and early winter.
Yeah, and what we're seeing is when these, for example, the extension with China, the tariffs that were announced on India, some of the new tariffs that were put in place, there are extensions that are provisioned with these tariffs when they're announced. In India, for example, for India to U.S. shipments, if you could get your container to arrive before, I think it was the second or third week of September, then it would not be applied this 50% tariff. But by the time that was announced, what I understand is based on India to U.S. transit times, it was already too late. So yes,
right at that cusp, like right then and there. Yeah.
So there's certainly some in-transit shipments from India to the U.S. that will benefit from that extension. They will get here under the deadline. They will not face 50% tariffs. But for everyone else, they're hitting pause. They're hitting the kind of wait and see approach. And I think that applies to China to U.S. as well. Will we see a new deal be put in place in the next 90 days? Or is it possible that things ramp up, for example, with the steel and aluminum derivative products? That's expanded now with the tariffs that are being applied to dishwashers and all sorts of other components, other machineries that are made up of steel and aluminum to help shore up that domestic manufacturing. So all of this speaks to where we're at now, which is we are at a low point, not only in comparison to last year, but we're starting to dip below 2023 levels as well. And my impression is that looks like that will continue. I don't think we're going to see a surge of shipments that are being booked to arrive before the end of the year, or this sort of front loading, or shipments that need to arrive before the holidays, because at this point there's so much unknown.
Certainly not in containerized freight. Perhaps if you have a great need and you don't mind the cost, air freight is your only option remaining at this point to get it in before those Indian tariffs take full effect.
Yeah. And I think this is a similar pattern that we've seen really for the last couple of TradeView live sessions, is that China to US is already at a point, and it's been at a point for some time, where we are at lows not seen in the last 2 years. We're certainly below 2024, and we're now well below 2023 as well.
Yeah. In short, the Chinese-American trade relationship has taken nearly a 30% hit in the relationship. And that doesn't seem to be a one-time hit. That seems to be what the new normal is for the relationship.
Yeah. Yeah. I mean, with something like this, it appears that the China to US bookings, especially when you compare it over the last 2 years, that has been the leading indicator. And now US import bookings overall are starting to reflect that maybe 4 to 6 weeks later. So let's pivot a little bit to the comment we made at the beginning of this session, which is, how do you predict the future? And using Vizion's talented data science capabilities and a lot of our wonderful team members, we've been able to model to a degree of accuracy that we're quite proud of the amount of freight that is scheduled to arrive into the US. And so looking at our prediction against what actually happened, even in the most recent week, we were right near about 94% accurate for what was reported by US Customs and the total volume of containers. And when we compare that to the year before, we are still just a little bit above 2024 levels in the most recent week. We actually had a bit of a boom week 2 weeks ago, almost 21% above 2024 levels. Again, this is that lagging indicator. So I would expect over the next 4 weeks, that's going to start to mirror the booking patterns we were just sharing, and that we will start to see this drop below 2024 levels.
It'll start to mirror this line descending here.
Exactly.
All right, India to US.
Very interesting topic. I think when we looked at this 2 weeks ago, we hadn't yet seen much of a drop. And
we have now.
We have now. We have now. I was like, the brightness on my screen, I'm trying to, maybe just I'm getting colorblind all of a sudden.
The green line is 2025 for this chart.
Yeah, we are well below not only 2024, but also 2023 volumes. Yeah, it looks like there was that brief surge, which maybe happened a little bit later than the surge we saw the year before, that yellow line. So that yellow line saw this pretty large surge in bookings that then kind of tapered off. We saw that, but it was much more muted. It was a small increase, and now we've really fallen off a cliff, and it doesn't appear to be heading upward anytime soon. And I certainly wouldn't expect it to, with the way the tariff.
I'd say generally speaking, it was more amplified last year, but in terms of like the seasonality with India as the origin, this is kind of this window of time that you're expecting to see the peak. You see this in 2023, you have the high water mark right here. This is a similar shape, like shark fin chunk here, right?
Yeah.
But it's not quite as amplified as last year. But this year is the shark fin, two tiny shark fins in some sense, and then a cliff.
Yeah.
So it's been an interesting pattern of breaking due to tariffs.
And based on the seasonality for the last 2 years, I wouldn't expect any increase. You combine that with the fact that the tariffs on India do not seem to be letting up, the fact that this sort of window to get your goods into the US and avoid that 50% tariff, that window's sort of already passed for any new shipments that you book today. So I don't see this rebounding anytime soon. And when we look at that expressed as a 7-day average, on a daily basis, you see exactly when it dropped in, it looks like August 10th or 11th, and it really hasn't recovered since.
All right, Brazil.
Brazil to US, 2 weeks ago, we had seen the drop already occur. So 2 weeks ago, we were right in between 28 and 32, that initial drop. We were below 2023 and 2024 levels. We did see it just creep up for 1 week, but in the last 2 weeks, it's dropped down again, and it's remained very low. So similar pattern here, although we do see in both 2023 and in 2024, there is an increase that is meant to happen over the next 3 or 4 weeks. We'll see if this comes up at all based on that seasonality of bookings. Those lines look very similar around, what is it, like week 36, 37 through 40. There's this little bump. That's going to really be interesting to see if that plays out in a similar fashion here, and if we get anywhere close to the volumes we've been at in the last 2 years. Similar shape to the line here. When we express it as a 7-day average, it's not quite as significant of a drop recently because the Brazil to US tariffs were announced almost a month before those on India were put in place. So another geography. This was
and a recent big meeting.
Yeah.
As of yesterday. Yeah. We had the president of South Korea. Is it president or prime minister? Please excuse me, but one or the other. The leader of South Korea sat down with the Trump administration yesterday, discussed a few things, announced a very large purchase from Boeing. But a deal I think is still getting worked on in some meaningful ways. But we haven't quite seen that true impact just yet play out.
And I think this just shows that when you look at some countries like China, India, Brazil to the US, there's so much instability, there's so much variation in comparison to last year and the year before. But a country who we have pretty stable trade relations with, like South Korea, this is what you would expect to see. There's actually very similar lines for the last 2 years. And for this year so far, not very much deviation.
There's also an interesting question here about for what is coming in from South Korea. One, what is sourceable elsewhere? Like, did you have other options to truly go to in the same way?
Yeah.
And two, I think there are some questions around some of the data here as well, because South Korea is a major transshipment location with Vizion as well. and how many of these shipments are, potentially coming from elsewhere, but saying that they're departing from Korea as well, because that is such a major transshipment hub.
Yeah.
But relatively speaking, this is somewhat on par with what you'd see, compared to the year before and the year before that. So it'll be interesting to see if we start getting a shift anytime soon.
Yeah, and to be clear, I mean, when in the next chart we look at this as a rolling 7-day average to look at daily bookings, we do actually see a slight increase. So if you go all the way to the right, it's that yellow line. We do start to see this creep up. So the question is this, impactful meeting with South Korea's leader and a potential trade deal, although many of the final details are still lacking. Could we actually see that lead to an increase in bookings, or will bookings really just remain stable as in comparison to where they were over the last 2 years? Let's dive into a few industries, product categories, HS codes. We want to go back to furniture based on feedback, based on some customer requests that we've gotten.
Based on some headlines about furniture maybe getting targeted specifically for new tariff considerations.
Yeah, and we think about big imports to the U.S., big companies like Target and Walmart, Home Depot,
Wayfair,
Ashley Furniture, and the like. Very sensitive to HS code 94.
And also, China is a major source of furniture, especially flat pack style furniture. Vietnam is also a major source of furniture, and they also got hit a decent amount with the tariff situation. But I guess it's a question, and I think we're going to get into this a little bit. The next slide. One of the hot times of the year to be buying furniture is back to school. You need to furnish those dorm rooms types of situation. And so we are seeing prices for the consumer around furniture, and we'll talk about back to school goods in just a moment, but those are creeping up in this category. And perhaps we can connect that directly back to the supply impact. And this is a pretty decent dent in inventory, thinking about it, right? We're talking about what is this potential gap here in a triangle.
I mean, in the most recent, that looks like almost 50% just in the past 2 weeks. But yeah, it's a growing gap. We'll put it that way.
Yeah, if I measure the area of this, I wouldn't be surprised if this was, roughly 20,000 TEUs over the course of several weeks, which is a meaningful volume of furniture that is not going to be on shelves or not going to be on e-commerce websites.
Yeah, and it's really interesting to see how stable 2024 was. Now, you did see that surge, that early peak season, and it sort of tapered down a little bit, but ultimately remained relatively flat at around 35, maybe as low as like 32,000 containers booked per week for the rest of 2024. What we've seen this year so far is a lot of ups and downs. Now, some of this is seasonal, right? You have the Chinese New Year early in the year. So that blue line mimics what we saw the year before. We saw that surge here in the early summer. But since then, it has really fallen off a cliff.
And these are the peak times of year to be booking freight for furniture, because most of this is going to be if it's relatively quick, and you're probably not booking the fastest direct for your furniture, but start thinking this could be a 4 to 8 week transit, depending on transshipments and such. So to get that inventory in for that back to school, for that inventory needs to be met to meet the demand. This is a concerning pattern. So I'm not sure people will be buying as much furniture as they were last year.
Right. Or if they do, it could be more expensive. Let's pivot to one more region here, which is EU to US. So specifically, how much are we bringing in from the European Union? There's been a lot written about the automobile industry. Generally speaking, American consumers buy more in terms of automotives and cars and whatnot from the European Union than the EU does from US auto manufacturers. But there are also other components to consider here: textiles like carpets, and then construction material like stone. It's really interesting to see almost all of these different HS codes creeping upward since July, since the deal with the EU was announced. As we call it, the largest trade deal in history. And many of the European leaders, generally speaking, having a much more positive light towards President Trump, towards his foreign policy, towards his tariffs. We're seeing that reflected in the confidence and the bookings about these types of products. Back to school supplies. And one thing to clarify here, are we looking at back to school supplies overall going to the US, or is this European Union to the US?
I believe this is overall to the US.
Overall, okay. So just, yeah, looking at this in general, similar to your comment about furniture, we're seeing almost the same pattern of decrease around the same time. Now, this is a larger time frame. This looks at all the way back to January 2024. So we are at a low of the most recent weeks we've seen, specifically for plastics. We're at a low that we have not seen for 18 months.
Yeah.
Now,
leather, a lot of this is coming directly from China.
Yep. Leather is a much smaller volume, as you can see in terms of the number of TEU that are booked each week. It was creeping upward. Most recently, it's dropped down. Just not as much volatility, I think, in general for that HS code.
And the noticeable price increase from consumers, that is, you can go do some Googling. That is news headlines across multiple news outlets right now, picking up on this higher prices for consumers for back to school items. You're probably feeling it at Walmart. You're probably feeling it on Amazon, etc. But we're seeing the finally some of the trickle down effect of these tariffs on some of these key products with reduced inventories or more challenging inventories, increased costs as well. So concerning.
Well,
our last slide for today.
Yeah, thank you again for everyone that joined, for the comments that were shared recently over the last 2 weeks. Again, you're giving us ideas for what different analyses and what cuts of data do we want to share. Please continue to send them in both via LinkedIn. I've also gotten messages privately and via email or into our website. So thank you again.
And if you're looking for back episodes as well, we're going to start pushing this out to our YouTube channel. So if you'd like to go check out an episode you may have missed or an episode a few months ago, you can go find it on the Vizion channel on YouTube.
Great. Well, thank you all. We'll see you again in 2 weeks.
Cheers.
Bye-bye.